Good morning. This is the 10th of September, 2023. The time is 11:32 a.m. West African time. I think it's about the same time in London. We want to look at the long-term trade, what the direction of the trade is likely to be, and what we can deduce. And we are going to be looking right from the higher time frame, the monthly time frame, down to the lowest time possible frame, the 15 minutes time frame. So we're going to take a holistic look at what we should expect. The first thing to do is to align ourselves, know what the long-term direction is. Then the intermediate direction, we want to know it, and the immediate direction of our trade. Then again, we want to see, because the way structure builds up, it's such that it can be really frustrating when you are waiting for your trade to mature, in line, where you are going. Can you wait for 6 months? Can you wait for a year before you get to your destination? So that's where the thing is. In life, we wake up every day and we sleep every day. We do our dishes every day. We eat every day. So you don't wait until it's like 6 months or 1 year, except you have other means. Now, for those that want to trade Forex or any other commodity, you must understand what the long-term structure is, the intermediate structure is, and the immediate structure, to see how you can pick something in the middle of it without losing sight of what the trade is going to do. So we're going to be looking at our instruments, but this is the monthly time frame. Captured in here on the dollar index is from 2011 here till date. So looking at the US dollar index alone, you would tend to think the market is bullish. That is what you would think. But of course, in the last 12 years, this market has been bullish for dollar. So until what we are seeing at this level. So we're going to look at it and what it is for us. But again, it is not enough to look at just the data captured within 12 years. What has happened before 12 years ago? So let's look at the DXY. So looking at the DXY to see what has happened some years back. Yes, good. So at this point here, this is the point of where my finger is pointed. That's 2011. So from this point to this point, this bullish run is the only thing that was captured on the US dollar index. So this bullish run is the only thing that was captured. Now, what transpired behind here was never captured on the US dollar index. Now, the dollar rose from the lowest to low so far and doing a push up. And of course, we will see that this run, is it a correction to this entire run? Because the recovery of this particular correction to the, or move to the downside, it's more than 85. It has broken 85 to the upside. So which puts this, and the way it has gone up in 5 waves. So, and the structure is very clear. This one had rather gone up in a very, very sharp wave to the upside, sharp wave to the downside, probably corrections to the downside. So we could have probably seen these as this move is probably a wave A, B, C to the downside. And after the correction of A, B, C, then we are seeing this move. We don't need to trouble our head over this being an A, B, C to the downside. Please don't trouble your head. The only thing we can do is to focus on this part alone. So we're going to focus on this part. But what I'm trying to do to tell you is that dollar has not been ever be bullish. No, until 2011. And so the bullish run is captured. And forget about what from this point to my left, what has happened. Forget it, just for you to know that dollar has been, fell right from 1985 till we began to notice this rise. And this rise may be linked to so many things, industrial revolution, the time that we begin to see the ICT, Microsoft, computer coming in and all of that, and internet, and all of that. That's the age here around this area, and we begin to see a surge, in dollar to the upside. The only thing we are safe to do is just to consider this structure and look at this structure on the DXY pari passu with what we have on the dollar. And it is not, I'm not interested if the dollar is going to go up and continue to go up for now, or if the dollar is going to come down and break this low. I'm not interested, and you shouldn't be interested, because the structure has not told me so. So I'm going to take structure per structure to see what we are saying. So we're going to limit ourselves to this structure here. So from here to here, and try to see the mood of the market, on this longer time frame. Now, let me go back to the US dollar index, and I will run back to the TXY. So let me go back to this place. Now, since we know that the mode that is captured is just the past 12 years mode, and the question we to ask ourselves now, this structure in front of us, is it complete or not complete? 5-wave structure. Now, like we know that every 5-wave structure correction or move, we must have ABC correction. And if ABC now decide to turn into something else, so be it. So what we should limit ourselves is that we should take what is happening now as maybe a correction to this entire run, if this correction is complete. And what again can we even have? So we have to look at this. Now, is that we see this as a complete 5-wave, and we call this A, and we see this move in the middle as a correction after this move, and we call this B, or that we're going to go up again and do a C. And that will be what? A, B, C, and that will be what? Now, we do know also that in trying to term something as an ABC, a B can be 50. A B can be 50. In our flat correction, in our any form of correction, a B can be 50. Can a B wave be less than 50? Under what condition are we saying that a B wave, according to Elliott wave, do we expect a B wave to be 50? We can only take this and say it's a B wave if you are being sarcastic. That is the only thing that we can say. Oh, we can say that this is a B wave if we say from here, this is our A wave, and what we have here is a B wave, and going up is going to be a C wave. This is monthly. And what we are seeing here on the monthly, I want you to look at this. What we are seeing here on the monthly is exactly what this one has presented to us on the daily time frame. So how we are able to study this will also help us on how we navigate this particular wave that is coming down. So this is monthly candle. Again, look at it. What this one had given to us on a monthly in the dollar rising is what this one has given us on a daily in the dollars falling. So we need to break all that down. So I want you to, lend me your ears and focus very well. Now, like I said, it is going to be sarcastic to say this to this point is an A wave and this one is a B wave, and we want to see A, B, C to the upside. It's going to be sarcastic because this correction to the downside is barely 40-something or 30-something. So just let me bring my diagram. So I will show you what I'm trying to say. So from this bottom here to this point here, this is just about 38 or no, about 40. Yeah, it's about 40. So that is about 40. So the correction, the entire correction down is not deep, it's about 40. So, and you never call that a B, because in a regular flat, your B can be 61.8 or more, not less. In a running flat, you expect your B to be even more than 100% retracement. Extended flat, the same way. Your B is going to be more than 100% retracement in an extended flat. So if this one has, so the only time your B can be shorter than not retracing deep, is only with a regular flat, and which this one does not qualify. So I won't say yet that this is A, B, C, but it rather looked more like a 5-wave structure. So, and I'm going to deal with it as a 5-wave structure that is complete. Why do I say that? From the movement here to this point, it's like a wave 1. And if you look at the retracement of this down, it fits in with wave 2, a 1 and a 2. And the whole of this in the middle fits in with a wave 3, and with a break of structure of wave 3, which will break the trend support. And this one will be seen as a wave 4, which is an A, B, C of a wave 4, and this is seen as the last wave of 5. And it will be correct to be last wave of 5 once it does not, it can breach 161.8 with a little extension, but not far from 161.8 extension. So of 324. So let's look at that. Now, with that said, on this time frame again, like I said, this is 1 and this is 2 here, which is correct. And 1 closed here to give us A, B, C of a 2. So which ended here. And that gave us this trend support. And we have our 3 falling in between this trend support and a break. This is the 4 of 3, 3 of 3, 5 of 3, sorry. Yes. So this is 3 of 3, 4 of 3, and 5 of 3 here. So 3 of 3, which has ended that, 4 of 3, and 5 of 3, which is correct for that. And we are seeing an A, B, C of a 4, which is correct. And this is a 5. Now, seeing this as a 5 wave, 1, 2, 3, 4, and a 5 wave. And we are seeing this. So this movement has broken this trend sub or resistance here, which is should be a support. It has broken to the downside. So which shows us we have been seeing momentum loss by this virtue of the fact that price had broken the structure of 3 of this trend. And that is one thing. This would always repeat itself in cycles from the bigger time frame or the longest time frame or the larger time frame to the smallest time frame. It will always be like this. So you must be able to identify this on any time frame that you are seeing it, even currently on what we are doing. So we must be able to identify that this would always happen. That after your 3, the third wave, there will be a momentum loss to break the trend support of the third wave created between 1 and 2 and the third, and break into 4 to tell you, to signal that the momentum is being lost and they want to change direction. So of course, they would have just come up here to truncate the 5th wave, 4 and 5th, but in this case, they pushed to the upside before they finished. And of course, we know going higher, breaking the upper limit does not mean that price is not going to come down. So with this, having said that this is 1, 2, 3, 4, and 5, we should expect this to be an ABC. So it can be a 1, 2, 3, 5 of A. The A should go up, and so the B should go up, and a 1, 2, 3, 5 of C. And that is one thing I can only expect based on what I'm saying now. So I should at least expect ABC to the downside. And that ABC to the downside, where do I think is going to stall? If it's going to be ABC, that this is going to be 1, 2, 3, 4, 5 as an A or 1, because you can take this 1, 2, 3, 4, 5 as a bundle of 1 or as a bundle of A, and this one that is coming down as a bundle of B, and the next one that is going up as a bundle of another C, if we are going to break this. And that is going to take time. But for now, we are going to say 5 waves is complete, and we are doing an ABC after 5 waves. So, and for me to say this is a B, at least we must do a 50% correction of the entire run. So in that case, let's first look at this. If this one agrees, because everything will agree, I think you can do that yourself without me wasting time, because I've done that. 1, 2, it agrees. To 3, it agrees. And to 4, it agrees with it. You know, probably we just did that retracement of this to 2 would not, okay, let's just look at 4, because we know we are not contesting the retracement of a section of 3, the third wave. So you can see to 3, to this point, that's about, 40. So we can still say that is still, in agreement with what we know the 4th wave to be. If you take it from either here or here, it's still in agreement. And for the 5th wave is in agreement from that. So this is 1.14. It never broke 61.8 on the US dollar index. So this is supposed to be the upper limit, or you can break it a bit, but not too much deep up there. But it didn't get there, and we had a reaction to the downside. So now, with that said, we know on the US dollar index that this one that is coming down is likely going to be a 5 wave of A, B, and we're going to run down. Another thing it could be, because if it's going to run like that and it's going to correct deep, to make this one a wave 1 and a wave 2, because it could actually be a wave 1, 1, 2, 3, 4, 5 of wave 1, 1, 2, 3, 4, 5 of wave A, B, and a C. It depends on how it's going to grow. I don't know, but we're going to deal with this piecemeal, because this one had completed 5 waves to the downside, and we are seeing this one to continue at least B. I don't see that this one is going to break the structure to the upside now. I don't see it. We should not expect it, because if this is 1, 2, 3, 4, 5 to the upside, we have not done, if this is A at least, we should see a B, and a C. We still need one more leg to the downside. And that one more leg to the downside, if it broke extension of 100, 123 to the downside, is telling us this ABC is going to be a big ABC that is going to come down. Probably we'll take this one, a bundle of 5 here as a 1, another correction to the upside as a 2, another bundle to the third way to the downside, 4 and 5. After that 4 and 5, do an ABC correction deep, then run another leg to the downside without breaking the bottom. That would have completed a cycle of a big ABC, A, B, and a C, and before turning up. So it could be anything. It could be anything. But so far, looking at the kind of correction that we expect to even get to 50, this is actually still very short. In terms of its move, it's very short. So if we go up and we come down, to make it an equal leg or a 123 extension to the downside, it will not get to this place. So I'm beginning to see what is trying to unwind here as a possible 1, 2, 3, 4, 5 to complete that leg of A, and a possible deep B, and another possible deep C to the downside before we turn up again. And that's going to take a long time. So based on what I'm reading here, but this is 5 to the structure, or structure to the upside, and a correction. Now we are breaking the structure, we are breaking this to the downside. We are going to retest this area. And a point that we should probably get to before coming down, because we might just get to a 50 of this or a 61.8 of that move before we come down from here. From here, a 50, is still here. And a 61.8 is here. So these are potential areas we could get to, even here at this point. We could get to this point. Between this area, we could find a resistance to turn more downward, based on what I can see on the monthly here. So this still looks as if it has unfinished business to the upside. That is what I'm seeing. This deep move, it looks as if dollar still has unfinished business. It needs to penetrate more to the upside for a deeper correction before it falls again. So that is what we are seeing, but we're going to follow the structure, per structure, on the lower time frame. So that is what we can see now. So we are seeing a possible correction to the upside before we break down to a C, and that C, if it breaks 100, 123 extension below, now it's now telling us it's going to grow into not A, B, C, but into 1, 2, 3, 4, 5 to complete a cycle of A, B, and a C. That would be deep enough to make this one a 2 to this entire run to the upside, a 2 before we break up again. So now, with that information, let's go on the DXY. With that information on the DXY, focusing on this area, on the DXY from this point, these are just correction. On the DXY, focusing, was it the instrument I used? I think it was not in the instrument that I used. I think I used this instrument. Okay. No. I think it's this one. Okay. So from here, and this is also like a 1 and a 2, which is correct, and like a 3, 3, 4, a 3, 5, and after that we have A, B, C, which is correct, and this being the last leg of 5. So for me, anybody may have called this one an A, B, C. it doesn't look like ABC to me, because to say that this move is A, B, and a C, the retracement here does not fit in with A, waves B of this entire run. So it more or less fit into a wave 1, 2, 3, 4, 5. And in this case, there's just a little break above 161.8. Let me bring the drawing for you to see. No, it's not this one that I used. Oh, God. Okay, so it's this one that I used. So it's a little, you can see, this is where our 1 now will be, a 2, a 3, and a 4. And just like we saw with, remember I told you, when you begin to see a loss, so a break out of wave 3 here is telling us that, okay, price is losing it. So this is wave 3, it's on actually the 4th one that it broke here on the DXY. It broke earlier on. So we can see that price after this came back, tested this area, now is falling. So it's going to fall. So what this is trying to do is also to do a catch up now. So it's going to do a catch up now. So we can see that the trend of this one also is broken. The trend of this wave is also broken. So just like I said, I won't treat this one as a possible wave A, B, C. I won't, because if you are treating one as a possible wave A, B, and a C, and you are calling this to be a wave 2 to this, it won't go. It won't go, because what I know B to be, in terms of deep correction, this is not up to it. Here, it's a bit funny. It's a bit funny here. It's a bit funny here. So it's kind of looking like an ABC, but when you look at the US dollar index, it fits in more perfectly into a 1, 2, 3, 4, 5. So we should deal with this as a 1, 2, 3, 4, 5. And we should see this as a potential ABC. And so if you are seeing this as a potential ABC on the DXY, what we are still saying, if that is the case, is that this that is going up is still a correction. So we are not where we're supposed to turn. So what we expect is also that this price may retest up to this level. This will be a tough call. I don't see price breaking this to the upside for now, based on the structure that we are seeing. So we are saying that the structure that is going up, for this to be a B and a C to the upside, potentially could visit this area. Potentially, it could visit that area. That is what we are saying. So we are saying that this structure that is going up potentially could react in this area to the downside. That is what we can see now. So we are going to be in this correction until we probably kiss this point to turn downwards, but not more than this, before we do our C to the downside. And that C can be a 3 or a C. And if we are to come down really and test deep to make it a 2, we should expect that price should still at least be in this vicinity. If I'm going to use black, be in that vicinity of a 61.8 here for a proper 2. Those are the areas that we should expect price to still come through if it's going to run an ABC to get here and break up. But we're going to be seeing the reaction also on the US dollar index to see if it's going to run more than an 100 extension or 123 extension to go deeper. So, but for now, this still has business upstairs, up here to go up. So what we are trying to say is that the dollar still has the capacity to rise. So the euro dollar still has the capacity to fall. So that is what we are saying. And on the upper time frame here, I think with that we have done now on the upper time frame, we should be seeing and counting our swing to see what swing we'll get here. So this is the first swing, which is after finishing this wave properly here. This wave of 5 finished here. So this is the first swing: 1, a 2, a 3, a 4. So if this one has given us a 4, and this is going to be the 5th, I don't think the 5th will do it here. We might be seeing a 7 swing to actually enter this space before we begin to come down. So this is the inside of this last wave. We have 1, 2, a 3, a 4, and a 5 to the upside to finish this. Ooh. So now I think this is the 5th one. 1, 2, 3, 4, 5. We might be seeing one more to the downside as a 6, and the 7th we entered here before we break down again. So that is what I can see. That is what I can see now. So, and this one that is going down as a 5 wave. It might give us an ABC on a lower time frame as the 6th and the 7th will go up into this zone, and we are going to fall sharply and run 5 waves down to the downside again. So that is what I can see here. Now let's take that to also US dollar index and see how many swings we can count also here. We need to do all of this. We need it. We need it. We need it. Otherwise, we will not know what we are doing. And here, we can't count that swing as we did on the it's different on the US dollar index. We were able to count, let's see again, on the DXY, we're able to count 5 already. And the same thing is going to present to us on euro dollar. So you see, you can count 1 on, that's the monthly, 1, 2, 3, 4, 5. So now on the US dollar index, is not looking like that. Probably if you go down, it might just give us like, a 3 swing structure. Okay, what am I looking at here? This one is actually funny here. This US dollar index is funny here. On the DJ, this is DJ. If you look at the one I used to use, which is the Dollar Jones. Dollar Jones is similar. So we are going to go with Dollar Jones. So it's similar. So it's similar. So it's giving us a 1, a 2, a 3, a 4, a 5. So we might be seeing these two. This last leg might be treating itself as a zigzag. We have an ABC correction and the 7th, which will not go beyond here. So permit me to go to the weekly and leave monthly, since we know what we are trying to deal with now. So like I said, 1, 2, 3, 4, 5. So that is what we have now. That's on the weekly. So based on that, where do we expect from this point of reaction? Now, this point of reaction now, it's a bit lower. It's a bit lower. It's a bit lower. It's a bit lower. We know we have always dealt with this one as a possible A or 1, because it might just run 1, 2, 3, 4, 5 of A, and but it's a correction. So far, we are going to treat it as a correction of the entire run to the upside. That's how to treat it now. So where do we think this is going to get to? So a 50 price already has gotten to a 50 on this instrument here. But I think that is not enough. It looks not enough. Price will kiss 50 here. And a 61.8 here. But it's going to go beyond a 61.8. But this is the area I might just be expecting a reaction. So for us to turn down. Just to put it on a 61.8. Just to put it on a 61.8. Okay. And we should see this as the last barrier. The price will not break before it turns down again. So we are expecting that in between here, we should be done. So what we are saying to ourselves now, based on what we are seeing, this entire run now, most likely is going to be a 1, 2, 3, 4, 5 of A, and a B as a 6th swing and the 7th swing to go up here and break. So structure for structure, we are going to be witnessing that break. From here, take this one to the upside. There's a break here by the first A of one structure. So I think that is what we should see. This one is not running like a and a flat in the middle or a zigzag to the upside. I don't think that is what it is now. It's going to run like a correction of a 7 swing at least. It's going to be a correction of a 7 swing at least. And this one, it's going to be like a zigzag pattern, the last one, for it to turn to the downside, most likely. So of course, we see this structure broken on that. Now we are taking structure. I think I've done this before, and I said again, when you look at this also, this structure, so there's a break of the second structure. We can see that on the other time frame. The third structure broken by this, and this also structure, a small structure here broken, and this one. So the way we saw this one as a zigzag pattern here, that's a 1, a 2, a 3, a 4, a 5. So we might be seeing a double move, a B here and a C before we turn down. So this is what it presents us here. So going into the DXY, we are comparing all this before we go to the lower time frame. The DXY. Now, so going to the DXY to look at this. On the DXY now. So if I take this as the limit here, on the DXY, we want to see that this area should be the last area we should expect price. This should be the last area we should expect price on the DXY. So we are going to be looking at all these structures as potential areas that price could make a U-turn back to the downside and dollar losing its strength again. So taking it from here, where is a 50? Price should at least, get to a 50, which is here, or a 61.8. So these are potential areas. We might not expect a deep correction to the upside. And if they decide to do that and make it 11 swing, we will know. But 7 swing in view for now. So these are the areas of possible penetration. So we are seeing this as an 1, 2, 3, 4, 5, and a 6B and a 7 before we turn down. So that is what we are seeing now. Having said that, let's now begin to go to the lower time frame. Now, looking at the lower time frame, I showed us something on the upper time frame. I said, what the DXY and US dollar index gave us going up, this is what we are seeing on this correction. So, and now, we now know that this correction is a complete move to the downside, and what is going up is a correction of the entire run here. So now we can see that this to the upside can only be a B for now, or a 2 to this move. So this move is not expected to break the top again. So we're going to have a wicked correction, which might run 1, 2, 3, 4, 5, 6, and 7. Now, this structure is what we think, is it completed or not? But for me, it's about being completed, and that is what we want to see. So the only thing we can do once we count 1, 2, 3, 4, 5 waves here is to see a correction of a B to the downside. And it's going to come as a correction to the downside. And how much correction? It can be shallow. It can be 50. But we're going to follow it, how that B is going to go. And so that we are not caught on the wrong side of the trade before the dollar goes up again. So I still see the dollar pushing up to where we said, around this area, before we begin to see the loss in the dollar strength. So that is what we are saying. So going to the US dollar index, by the time we are done with this, to go on the euro dollar will be much easier and faster for us, because I just need us to see this. So this is a sharp move. You can see this is like a sharp move. That the dollar is already so the last move that we just saw after this move here, so we are seeing corrections here, and this seems to be going up pretty strong here on this particular instrument. So if we go to where we use normally, is it the same here? All these instruments are, what they give us is different. You can see on the US dollar Dow Jones, this is what is giving us. On this DJ, see what is giving us. So it don't look like you can see. So well, the only thing I can interpret from here, based on what I can see here, is that it says that this one had finished, is correcting A, B to the upside. And what this one is doing is, okay, this may be pushing it as, okay, a wave 1 and a wave 2 as a B, and a wave, 3, 4, 5 or something before it comes down. This is the way this one is looking like now. On this particular instrument, which is the DJ, Dow Jones, it's looking like this is actually very impulsive to the upside. And so we are going to check all of this instrument and apparatus anyway. On this one, so this is what it has given us so far. So we should see price rising probably to break this, touch this area, but I think this is going up as, you know, a correction to the upside. We have one more leg to the upside before it turns. So let's go to our instrument that is more like what we are used to. Now, this instrument now, let's see what is given on the weekly. Does it look like that of DJ on the weekly? Okay. Yeah, quite impulsive on the weekly, but it has run like 5 waves on the weekly, which is quite impulsive. We can understand this. So, you know, the DJ can, this one is FX Dow Jones. The DJ can make you feel like, oh, the price is still going up. And before you know it, they are correcting. So this one has put it in a very clear perspective that has run close to 5 wave structure. So let's go inside of a 4-hour time frame and look at this one is very familiar to us on a 4-hour time frame. So we can see what this has given us on a 4-hour time frame. That's the fifth leg. So pretty much like 1, 2, a 3, a 4, and this is 5. So this looks like the fifth wave. So what I can see here is the price going up. The price is going to be just wobbling and correcting upwards before sudden fall. So what I can see that this one is trying to do before we begin to see a deep correction, at least we are going to treat that correction as a correction to this until structure is broken to the downside. But I still expect a deep ABC, an ABC correction down before it goes up again to break the top. So, and from what I can see here, price is trying to waste time here. If price begins to crawl up, by Wednesday, by the time we have a CPI on Wednesday, price is going to turn sharply to the downside. It's going to turn sharply to the downside by Wednesday. And that is what we want to sell, really. We want to sell and US dollar index. That means we want to buy euro dollar. So this is going to continue to waste time. And so you must be careful. It's going to continue to crawl up. But if price begins to move down before Wednesday, then the CPI would push it up again. So that is what we can expect from what the news, because everything is waiting for that news on Wednesday to come. So we might not see any big move until Wednesday. So that is what I can see here, the way it's set up. Looking at the other instrument, the DJ on the 4-hour, what is it like? Okay, you can see different instruments with different, well, I think it's the same. It's only when you now go, this one probably tailed off properly as if this is part of your correction. So this one is just putting it in a perspective of A wave, which has just finished, and a B wave going up. That's the kind of perspective that these ones are running now. So they're running like, okay, this one is going to go be 1, 2, 3, 4, 5 to do an ABC, go up again, you know, as they 1, 2, 3, 4, 5 to do a B before they run to the downside. So that's the perspective. That is nonsense. I don't like this. I don't like that. So let's go back to the one that we have been using, which is FX, FXCM. So let me bring our structure, our drawing for analysis. So now that we know that you can see everything is falling to the base of the US dollar index here, and that this push up, it's more or less just like we saw. Just like we saw. Now, look at this structure. I want you to picture this structure here. picture this structure here, the way price came, fall to the downside here, and go up to break the top, and that we're expecting to break down. Picture that structure. This structure on the 4-hour, picture it also on the DXY. Picture it also on the DXY, came down, it has broken structure to the downside, the trend line to the downside. Let me bring the drawing. Can you see? Broke this, like I said, it will always be a cycle and repeat itself. See, the way it broke this to the downside here, you can see the way it broke this to the downside, just went up again to break the top again. The next thing they're going to do is to break it down and correct ABC, and before they go up again. So look at this structure. And let's now look at that structure on the monthly time frame. What I said. When I said this one is a 3, a 4, break of structure here, and this one went up, now they are coming down. Look at it also on the US dollar index. Look at it also on US dollar index here. You know, a 3, a 4, sorry, a 3, a 4, and a 5 break to the upside, and suddenly it will do all the sharp and weak here to turn to the downside, and before you know it, they're correcting. So let's now go back to where we are on the 4-hour. The way this one has gone up, you know, to break down, that's the same way this one is going now. So what you can do is to take this and look for a 161.8, just like we did a 161.8 on the US dollar index. And we said that 161.8 from the purple here down to the blue area here will exactly fit in at this point. So this is price potentially could still crawl up to this area by Tuesday or Wednesday. You must know that. You must know that price could still crawl up here and or even break it because they are correcting. So, and if you look at the DXY, price also could still crawl up on the DXY. Like we said, price could still crawl up the upper limit is here, but there's nothing stopping the price from a bit breaking it slightly to the upside before coming down. There's nothing stopping the price from doing that because it's just an A wave of that correction. So you must know that. So in case you want to do anything, you must know how to plan if you are looking for your sell on the euro dollar. So let's now go back to euro. Let's now go to euro dollar. So I'm not going to go inside of the structure of US dollar index so we know what we expect. So we know what we expect because to me, 5-wave structure is completed on those other instruments. 5 waves is completed. So I'm not going to go into saying that this is, some people will say, okay, this is like a wave 1 and probably 5 wave is completed here. Some people might think, okay, maybe 5 wave is completed here and this is a wave 2 and that we're going to see, or this is A, B, I'm going to see a C. I'm not going to go into that. It doesn't look like that to me. And this does not fit in for a 2 if this is 1. So it fits in more. Can one say that this is a 1 and a 2? That's another thing. Can one say that this is a 1 and a 2, and this is a 3, and this is a 4? We have to look at, you know, what we are, if you say this is a 1 down here, and this is not up to a 50, this one cannot qualify to be a 2. So this one as a 1 and a 2 it still makes sense to me, you know. Just like the way we will see it on DXY. On the DXY, we can say this is a 1 and this is a 2. So this being a 1 and a 2 still looks more like it for me, and that this is a 3 and a 4. So this is a matter of how you're able to count your wave and how you're able to make your measurements. It's very going back to euro dollar now. So going back to the euro dollar, so what I can see, I can still take this one as a 1 and a 2, and that the whole of this properly a 3, and this is a 4. This is a fourth wave, which agrees with a fourth wave. It will agree with a fourth wave if you take this one as your 2. From that point to the end of this move here, before we have that reaction. So these are like almost like less than a 50. So, but on other instruments, it represents a fourth wave, which is okay. And this is like an A, B, and a C, which ran in 5 waves. So A, B, and a C, which is correct. And this is just the last 5 wave. And with the last 5 wave, the only thing I can see from here, 1 and 2, is that the third wave is broken and we are to do a fourth. Are we done with a fourth wave? So potentially this can still crawl up to finish a fourth wave here, come to the downside one more time before they reverse it and do a deep correction. And that deep correction is going to be a correction of this entire run, probably to a 50 or a 40 before they turn down again. So we are going to but what we want to do is to look for our buy here, maybe at the lower level once we break again. How to really go about this now, since it's going by his own structure. If it's going by his own structure, now we feel that the last wave, or this is 3, 4, and this is wave 5. And we know that the extent of that wave 5 should be here. But then there's a likelihood that it might just break below here. So in case you want to take a risk, how do you take your risk? You want to look for your buy, because the wave is not still complete. This is the last of it, and they can do anything here. What we can do here is to look for, okay, this is our 2, this is our 3, and that if you take it down here to this 3, where should we have our 40? Our 40 is around this area, 30 is around this area, and 40 is around this area. So if we take those 2 levels for us to see how we're going to push down, what we can now do, we can assume that looking for from this 3 and a 161.8 to the downside, using the 58th retracement of this wave 4 will now mean that potentially price is not expected to break beyond here. So which means price could still get to 062. Maybe you're going to use 600. So potentially price could still come here. And if we want to use our 38, which is here's the 38 now. I think, okay, this is the 38. This next one here, yeah. If we want to use the 38, so it means that the area you expect price to react, these are the areas you will expect the price to react. So price has a tendency to still break down, get to this point. So that is what I can see here now. Price has that tendency to still get to this point. And in that case, we will say we should expect price to come to this area. So we should expect price to come to that area. So for me, if you are picking any order, you should put in your stop loss at around 1.05900. So, and so that will not take you. That is what you can do now. Are we done with this correction? I don't think so. I don't think we are done with this correction. I don't think so. Price has the tendency, I believe this is looking like they're going to make wave 4 here complex before they run wave 5 sharply to the downside, break the structure to the downside again before they move up. So third wave is complete. We can see that break again, just like we saw when I said you should look at this entire run. Where's the entire run? On the DXY, yes, on the DXY. I said, look at this entire run on the DXY. This exactly here, that we saw 3 broken and this one is going up. There's the same thing is what we are saying now. This is longer than I expect, or because I need to break this thing down. So now we are seeing the cycle, because it has broken the cycle of 3 here. That's the first one here. Here, cycle of 3 is broken. Here again, the cycle of 3 is broken. So we are doing a fourth, and we are almost about running the last wave to the downside, which by Wednesday, I believe they will complete that. We should be looking for upward movement, at least to correct the entire run to the upside, to a 40 or a 50, and we'll see how it goes. We now know where price may push to. So if you look at the DXY now, looking at the DXY, so that you're not fixated on the DXY, I'll soon be rounding up. On the DXY now, so this is potentially a 38, a 50. So on the DXY now, so it means that taking that into consideration, so from where 3 is on this, so from 3 to a 50, we are saying that price may still climb and test this area. And if it's a 38, price may still come to this area. So we should be expecting price potentially. So if you are using this instrument to trade, behind this black line is where you can hide. These are final stages, and to see the price. Those are final stages to see the price. Now, if you're going to look at US dollar index to set that, US dollar index, the same way, from 3 to 50, so to a 50. So we are saying that this is going to potentially can push up to this area. or not. So that will be last place to expect. And if it's a 38 of the last wave, which we expect in that place, we are saying these are potential areas based on the lower time frame the price may get to. But it's much better to look at these. So as this is the limit here, so we still put that edge as the limit there. But why we are using this is for extension. You know, in extension, because sometimes we don't understand why it has to breach that and come here. So, but when you now look at the internal structure of the last wave here, so you should know where the wave 4 supposed to be, which is this area, so you can do your last whatever. So price is already burning down. So this one is going to still go up one more time, break the top of the last, and that will be the last top, and the price will be coming down. So to do a deep correction. So we now know that what is in the pipeline, it's a deep correction. So if I go on the daily to quickly see those levels that we should not break now, we should at least be a safe haven for you to hide. Okay, now to hide yourself on the US dollar index will be here at this point, price, so which coincide with this area. Price is not expected to take this area. So you can see it coincide with that area there. Okay, so and on the DXY, so we can see where it coincides with on the DXY, which is price will still not break this black line. So on the DXY is more or less around this area. So price may not break this A on the DXY. So, but this will be the last line after maybe 5 pips or 10 pips after this last line. That's where you can hide on the DXY. It has broken this already and this, so it may not break this before we see a B and to go up again. So on the euro dollar, which is our instrument, so I'm going to end in less than 5 minutes now. Yeah. So on the euro dollar, so we are saying that potentially price now can break this, but not here. So potentially price can break this wave here. It has broken this. So potentially price can break this, and that might just be the end of it here. So your stop loss at 0.5800 or 900 might just be ideal for what we are seeing now. And with that, this is not making any sense yet. So because the only thing I can see here, just the closing moment now. So the only thing I can see here, it's like ABC of wave A. That's the only way, you know, what I can see here. This is looking like a wave A. So, and we may be now seeing a B in the middle. If this one is A, so we might be seeing ABC of a B, and for us to turn up and finish a C before we now finish with 5 of this particular structure. So that is what I can see. That is what it's looking like. A, that's the A wave. Now the B, A of B. So a B of B, and this might just be C of B, and before we turn up again to close this and as a C and to come down and finish that. So with that, that ends the long session.